Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels analysis or any related items on these my charts. It was all my original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so let me just remind you once more, it's a very timely reminder given what's happened during the middle of the year and as recently as October. I've said here repeatedly in this commentary for close to a year, the most significant feature of this market are the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, and I suppose also the congestion this year in January, February, late April, May, early June, and the high 20 weeks ago, plus the more recent highs higher 13, 11, 10, and 7 weeks ago. In recent months, this has also added up as a test and halt more or less at the gold long moving average, currently 15,355. In addition to these, for many months, I've also pointed out how the higher 15,840 level, along with the 15,665 level, was and is also still a key level on the top side. Please continue to bear these levels in mind, however low we may venture. Okay, so 5 weeks ago I said, and I quote, excuse me, closer to the current market, another feature to watch out for is the 50% Fibonacci line for 2025 at 15,325. Earlier stabilization over this 50% Fibonacci line had placed the gold long moving average under direct threat. However, we have since pulled back lower. It's worth now looking lower still. First at the December low at 15,055. As if we exceed that on the downside, and we still might, well, this month of October will be set up to become a possible monthly key reversal, with all the implications that may have. Then after that, also keep an eye on the November 2020 low, down at 14,935, and that's the end of the quote. Well, there's a lot to unpack there. First off, we did not manage to make a monthly key reversal down in October, but the threat was there, and prices duly obliged by heading lower in November, holding for a bit just ahead of the 14,935 level. But then the market punched down through this level. As you can see, there was little underneath until the congestion in late 2019 to early 2020, around 14,395. And the drop and swift pullback up 2 Fridays ago seems to be a result of that support. Okay, so what have we done? Well, we have exited out of a late May to November rectangle pattern between 14,935 to 15,665, a pattern I mentioned 11 weeks ago, and ever since. This break below the rectangle gives a primary target in the 14,540 zone, which was reached last week, but also gave a secondary, harder to reach target X1 down at 14,205, significantly below the congestion around 14,395. So far it seems the market is not interested in trying that far down, and I threatened to retire it last week and will do so after this week's commentary. Instead, the market has opted to form a different pattern, something I mentioned last week, a November-based V-bottom. This now brings into play those key levels I mentioned right at the start, the 14,935 November 2020 low, which we've been testing earlier last week, and again this week, as well as the September low at 15,055. The dead cross combination, the green short medium moving average, currently at 15,115, and the mauve medium moving average, currently 15,1655, and even the 50% Fibonacci line for 2025 at 15,325. The feature of this pattern to now watch out for, and it's one it seems to be forming, is a shelf or small extension. This shelf is what I think most of late last week and this week's actions, and that's what it's all been about. So how should we regard this shelf? Well, it's best to look at it as being a halfway hesitation, and that if it is so fully formed, we can then look to perhaps, just perhaps, see prices try up all the way to the 50% Fibonacci line at 15,325, or the slowly declining gold long moving average. currently at 15,350. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is a thoroughly broken, but even now still refusing to die, old dark blue May to August 2023, that's how old it is, 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines, which are currently 30.89 to 29.25 respectively. And in October and now in early November, as well as this week in December, the dark blue upper tine has helped cap the market's rise once again. This thoroughly broken dark blue pitchfork still will not die. Even when I thought 32 weeks ago that it had finally expired, it still came back like a high-functioning zombie, influencing and impacting the market. This bullish shift pitchfork had within it two patterns, one done and one I think is done, but part of it might still be alive. The first, which is the partially done pattern, is the bright red mid-July to early October bull channel, currently 29.32 to 30.58. This captured most of the action but was breached and broken in October, and even then the broken bright red upper bull channel line started acting as a support until late 3 weeks ago. The part that might still be alive is the bright red lower bull channel line, currently 29.32, as this can act independently as an uptrend. So watch this bright red uptrend. The second pattern, now done, is the bright green late July to late August ascending wedge pattern. I said 7 weeks ago how I had my doubts about this bright green ascending wedge pattern, especially the upper trend line. Nevertheless, it showed the gradual ascent of prices and how the market moved up from the bright red bull channel up to the bright green ascending wedge pattern. Ascending wedge pattern. Late 3 weeks ago, the market punched down through the lower trend line, aided by that pretty impressive, very slowly declining purple neckline extension on top, which is currently at 31.08. And that's of the September-December 2022 head and shoulders top. That's just above the dark blue upper tine. And it caused the recent cap on the market. As a side note, this purple up neckline is again being tested today, and so far the market has rejected punching up through it. But please pay special attention to this neckline extension, as it has been key in capping prices. And if, as seems likely, what with the lower lows, the higher lows we have seen, this would be pressured again, and we might see a significant move higher should it finally give way. Going back to the break below the bright green ascending wedge pattern, this gave us some potential targets below of a primary target X down in the 29.36 zone, and not too far from the dark blue middle tine, and a secondary hard to reach target X1 down in the 27.53 zone just above the dark blue lower tine, and a further tertiary much harder to reach target X2 down in the 26.93 zone. However, there was the beginning of some action late last week that fully developed this week, leading me to retire the targets X, X1 and X2 below after this commentary. It was, as I said last week, and I quote, there is one fly in the ointment, so to speak. The action last week and the follow-on so far this week has given an indication of a possible horn bottom pattern. However, unlike the horn bottom seen in LME aluminium, the one here is less developed, and I'm not comfortable to lay out topside targets or even potentials for it, though I would suggest keeping a close eye upon it. I know I will be. And that's the end of the quite long quote. Well, since then we have developed the horn bottom with a primary target at 30.89, which was reached yesterday, and a secondary harder to reach target X3 up at 31.17, just over the purple neckline. I'm trying to think if we actually managed to get up there today. No, we haven't so far. So 31.17, which is just over the purple neckline. the neckline extension. I also downgrade for next time both the bright green ascending wedge pattern and the bright red bull channel, as I think there may be more substantial and relevant pattern or patterns ready to show themselves if I do that. LME 3-month tin. Okay, so the big picture here continues to be focused on the major pattern of the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We are right now in between the dark blue middle time below, which is currently at 36,795, and the dark blue upper time above, currently at 41,590. And in the process, we made a new high yesterday at 40,000, a high not seen since May 2022. This all ties in with other moves, as November's highs exceeded October's, and now the one seen in April. The high actually there was back in April for 2025. Yesterday prices rose up as far as the purple upper trend line, currently at 39,955, of one of the two other patterns in operation, one dating from July that still works, just about, and a newer nascent October based one. They are both ascending and expanding wedge patterns, and the larger July based one is highlighted in purple, currently at 35,235 to 39,955. Whilst the newer October based one is highlighted in bright green, currently at 36,785 to 39,105. Now, there was a small breach of the purple upper trend line last week, but it was only small. However, the bright green upper trend line has had a more significant break higher, with a pair of consecutive closes over it. This is enough for me to consider downgrading it or even retiring it completely, as it will open the view for seeing more relevant patterns. It all depends on whether prices can stay above the bright green upper trend line or not. If they can, then it would not be a surprise to see the market start looking at the dark blue upper time above, currently at 41,580. If not, then I suspect we may see prices starting moving back down towards the ever-present and important bright red neckline extension, currently at 37,320. And that's of the August to November 2024 head and shoulders top, which had earlier mid-year capped prices along with the dark blue middle time.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.